to the channel. And on this video, guys, I'm simply going to be explaining about a simple order flow technique that I can teach you guys to use when you want to analyze the charts in any given time frame in terms of order flow, right? When we're talking about order flow, of course, we're talking about institutional order flow, right? We're going to be looking at the major highs and lows that are put in from time to time, and how they affect the market, and how can they be used to predict price direction, of course. So as you can see, I currently am sitting on the gold chart. It's on the 30-minute time frame, and from here, what I just did, right? So today's price action is pretty much here, right? The CPI news and stuff, right? But what, as you can see, what I'm doing here is I'm zooming out of the charts to the maximum point, where I'm no longer seeing candlesticks, but I'm seeing structure as structure itself, right? I'm only seeing highs and lows being put into place from time to time. Now from here, right, we can see that this market was pretty much bullish, like, all the way from here, right? When we come behind here, you'll see that, order flow shifted, right? As you can see here, firstly, it was bearish, right? Like I said, we just look at basic highs and lows that are being put into place, right? So as you can see, we had a low that formed this high, and then this high came out and took out this low, right, to form a new low. And from this formation of a new low with its high, price now began to form this sort of downtrend, right? That break there, that low, that high. I'll remove this. Again, right, that high that puts in this low, this high, this low. So price here begins to range and comes out, liquidates these highs, and then re-breaks bearish once again, right? There, right? Bearish again, right? Bearish again, right? And price now breaks bullish, goes bullish for a while, right? So this was the reversal area. Now, as you can see from here, price was pretty much putting in lower highs and lower lows, but from here, price now made this huge up move to indicate that this was a potential shift of the market, right, from the bearish to the bullish, right, which was pretty much confirmed by price coming in and tapping in. So let's just remove this rate. Price comes down and taps this overall last up move before the down move, which is, aka supply or an order block, and price from there now, right? So as you can see, that price from here puts in this bearish price action, right, of this sort of bearish, putting them very far from each other. I don't want to do that. There, and then we have there, there, there. So from there, right, you can see that price now from here, right, we can basically see how price is moving, right? Price from here, it changed its character here, right? It started going bullish, and from here it reverted down, because why? We had a bullish order block, which was an area of demand that was highly unmitigated, and it held a lot of importance towards initiating this overall up move. So price had to come down and mitigate this area, like I said in the previous videos, that mitigation doesn't always instantly happen. No, mitigation happens over time, and that's exactly what happened here. So price decides to come down and mitigate this area of demand right here. Now from this mitigation, we can see that price now comes in with this intermediary bearish trend, right? Since we are ranging from pretty much this low to this high, right? So price puts in this bearish trend to come in and mitigate this area here, and once this mitigation is done, price now changes again into bullish, comes down, tests once more the last down move before the up move, and then gives you those runners, right? Those big pushes of price to the top side, which indicates what? The order flow now shifted bullish, right? From here, with this break here, price had now overall shifted bullish. As you can see, price never reverted, and then price now from there just began putting in new highs, right? So we're just looking at constant overall highs and overall lows, right? So from this overall high, we had this overall low, and then boom, that's a break of structure. We have an overall high and an overall low, right? Once again, boom, that's a break of structure, an overall high, an overall low, right? And then we just look, all this nonsense in here, this is just a range, right? Price is simply ranging, and that's what price does. technically building up liquidity, some sort of trend line liquidity is in there, but of course that doesn't mean that you have to sit back all the time and just watch. No, you can be a part of those moves, but with the proper understanding of what is happening inside the charts. So there we go again. So let me just put in this ray. So price comes and breaks here, right? So boom, that's there. Another high, right, and another low, and then this high gets taken out here, hence forming what, another high and another low, right? As I say, we're just looking at overall highs and overall lows, right? So from simply looking at this, right, we can basically see that let me just remove this, sorry. Boom, we can basically see that what price is pretty much moving in a bullish trend. As you can see, it's a series of highs and lows being put into place over time, right? So as you can see, this is a significant indication of a bullish market. So if we were trading in this whole area here, would simply be looking for bullish entries, right? Because we're in a bullish contextual market which keeps on going bullish, right? But of course you can trade the counter trends, but as I said before, with the proper knowledge to what is actually going on in the charts, right? Unless you have that, then I suggest it's pretty much better to just sit back and wait to go with the trend. So price keeps forming highs and lows, right, up until this area here where price breaks bearish, right, comes up, breaks bullish, right, with here, and then comes down and re-breaks bearish once again. So that shows what the dominant trend is. So price attempts to break bearish, and then the bulls come into the market, try to push the market up and break bullish, but yet again they fail, and price ends up reclaiming the bearish trend. So basically we're sitting at a very bearish market. As you can see, there are potential shifts from this bullish trend to this current bearish trend that we're going through, right? And from here I was pretty much expecting pullbacks into this area here of supply, but it didn't happen, and that's normal, right? It's part of price action. It's what price does. It's what price actually always does. So yeah, but we had some pretty cool entries in these areas here where we're looking to target these highs, of course, but we had our intermediaries take profits about these highs, right? So from here, inside here, we had a change of character where the market was simply going bearish, and then it broke bullish. We took entries off of areas like these in here, right? We took entries in many of these places, right? And we were overall targeting the highs, of course, but our major take profit target was up here, and it was never met, and that's fine, right? We still got our profits. So from here I had bullish entries in here, so and I was targeting this area here. So price comes up, fails to break, right, comes in, takes me out of break even, but of course I took partials in this high here, and then from there I had other re-entries in here, and then price comes up and hits my take profit target with this highs here, and then price now comes down, gives another re-entry, and of course I was targeting the high, and price just came, took out the high, came back down again into an area of demand and did the same thing, right? But this was pretty much just a range. Price was basically building up liquidity, and then price finally broke down, right? And this high here, this low was practically taken out by this low here, and price now began to move in a bearish sentiment, in which we also had pretty cool entries in here too, right? I just had this just about yesterday. Here's price made this high from this low. It was simply a liquidity move and a mitigation to this last area of supply. So from here I was basically looking for an entry to target this low here, which was my take profit target, and that that entry I didn't get a proper entry in here, but I got one in here, and I was able to capitalize on this move and target this low, but also hold it, right? And from here we had areas of unmitigated price action within here. So today's CPI news came in, triggered my entries, and then went down once again and took out these lows here. This is yesterday's lows, right? So that it is where it is. By the way, I would very much appreciate to break down this CPI trade for today. it's actually one banger of a trade, but I'll do it in another video, of course. But it is what it is, guys. I hope this video was very informative to you, and if it was, then don't forget to hit that like, subscribe if you haven't, turn that bell button on for notifications, of course. And until the next one, guys, stay safe, have a nice trading week, and of course, peace out.